Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at Apple on the daily and weekly time frame, getting a little toppy here after such a big move to the upside. We have an inside candlestick to watch on Monday with a range, the low of 115.64 and the high of 116.50. So a break in either direction will let us know which direction to be looking on Monday. We can expect to see some consolidation in the near-term future just because of how significant this bull move has been. And we've seen higher lows 7 days in a row now. So that just shows you the strength of the bulls as we have made a significant move to the upside. So there's your higher low and higher high on this bounce. We filled the gap here that was up at 116.71. And we're now just looking at the high of this week, up at 116.73, and then really just the high of this move that we've seen for Apple the second half of this year, up at 118.08. So Apple is absolutely showing its strength time and time again. We had some weakness in the market on the Fed day. Apple was able to shake that off. So we'll see how this inside candlestick shapes up on Monday. The weekly time frame, you can see the bulls are very, very strong. And after this candlestick 2 weeks ago, we knew that the bulls were strong because we had that higher low and higher high, and you could see there was very little resistance here once we established these moving average supports, the 100 and the 20 period, and once we were looking back up towards the high in the 118 range. On the verge of a bullish MACD cross, increase in bull volume, and the bulls pretty much could not be happier with how the past 2 weeks have gone. So looking at the shorter term time frames, anytime you see an inside candlestick on the daily time frame, you can zoom into the hourly and get more details, but it's very clear that the range is tightening where you have your high and your lower high plus your low and your higher low. So you can see that we're trading pretty much straight across the second half of the day on Friday, showing just how tight we're getting. And a break of the low is bearish and a break of the high is bullish. Zooming out, the bulls certainly have the trend. Looking at the 10-day time frame, very nice stair-step pattern, higher lows and higher highs, showing the bulls are in full control. And we will see what next week brings. Definitely worth keeping an eye on the technology sector overall. We have XLK is the sector spider for technology, and then you can also look at QQQ, which is majority technology holdings. So the technology sector held up better than a lot of other sectors when we saw the bearish reaction initially to the Fed on Wednesday. And we'll see if that trend does carry over into next week. So I appreciate you watching. Hope you have a great rest of your weekend, and we'll see you on Monday.